This picture describes the differences between the Shenzhen Component Index and the GEM Composite Index. The Shenzhen Component Index, we think, it represents the overall situation of the stock listed in Shenzhen Stock Exchange, but it primarily, I believe, describes the situation of the main board in Shenzhen plus the GEM board as well, both. However, the GEM Composite Index only represents the situation in the GEM board in Shenzhen. These are their differences. This is a short one, actually, from April the 1st, 2021 till May-June the same year. It's about 2.5 months. And first, we can tell the differences between these two indexes. However, from the changing trend, we must say they are similar to each other. They're similar to each other. Okay, we find here are not very much similar to each other, but in general, they're similar to each other. For example, for some of the big turning points, they are pretty much similar to each other. Okay, and the legend here showed some of the pictures. Actually, we can move this legend to here. Okay, this is from a short run. Of course, from long run, I believe they are even more similar to each other. Okay, let me demonstrate how to move this legend to the lower right corner of this picture. First, let's copy the command. Copy here. Copy to Jupyter Notebook. I'm introducing a new option in this command. We have, for example, log2 equals to lower right corner. Well, we don't change log1. Here we have log1 and log2 as new options, while log1 describes the position of the first legend in the picture. Let me introduce. This is the first legend, and this is the second legend. We expect to place these legends in empty area of the picture. So let me show you how to change this. We expect to move the second legend to lower right corner. Let's see the changes. Oh, we find some Chinese punctuations here. Okay. Then we change the Chinese punctuations to English punctuations. Let's look at, do we have anything else about Chinese punctuations? We don't have now. And I tell you that the single quote and double quote in Python are the same, no difference. But for one string, you have to use either single quotes or double quotes. I don't recommend you to use a single quote here, to use a double quote here. Python may remind you an error message. So, okay. Okay, let's see that we have the first legend here, and we have the second legend here. So by default, they are here, and by default, the second legend is here. The location is described as upper left. This part is upper. This part we call the upper left. This part we call the lower right. My pen looks very strange. What about this part? This part is called the lower left. What about this part? This part would call the upper right. This part is called the upper center. This part is called the lower center. This part is called the center left. And this part is called the center right. What about if we expect to place our legend here? It's simply called center. Okay. Okay, we have done the exercise case together. Next, let's look at another part of the stock market indexes in China. It's the Hong Kong Hang Seng Index. Well, in Cantonese, it is called Han Seng. Okay, it's the Hang Seng Index compared to SSE Composite Index in mainland China. This is the Hang Seng Index in Hong Kong and the SSE Composite Index in mainland China. We are interested in finding out what are the differences between these two, because we have SSE here in mainland China, and we have HKEX here in Hong Kong. And the market index for HKEX is called the Hang Seng Index. And the market index, the primary market index for SSE is called the SSE Composite Index. What are their differences? Both belongs to China, but they are in different places. There would be some differences. Our point is to find out the difference. What are the differences? I believe there will be more and more common points between these two markets, because now we have a new tool called Wu. By this financial instrument, investors in Hong Kong can buy shares in Shanghai, while investors in mainland China can buy stocks listed in Hong Kong leveraged by SSE, similar for investors in Shenzhen Stock Exchange. So they can have much interactions between investors in mainland China and investors in China, Hong Kong. In this way, the stock performance of these two markets will have more and more similar trends. That's why there will be more and more similar trends for these two stock markets. However, even so, compared to other stock markets in mainland China, there were much difference between the SSE Composite Index and Hang Seng Index. Here we have the solid blue lines for Hang Seng Index and the orange dot lines for SSE Composite Index. From this picture, we can easily find out the big difference between these two indexes. It's very, very big differences. However, we also find out many similar trends as well in some of the specific periods, such as for these periods. They're quite similar to each other in terms of changing trends in these areas. They're pretty much similar to each other. So we can find out from long run and from short run what are the differences between the SSE Composite Index and the Hang Seng Index. Now let's do a practice after we have a brief introduction about the Hang Seng Index in Hong Kong. This is the Hang Seng Index in Hong Kong. It uses selected 33 mainstream stocks in Hong Kong stock exchanges. This is called HKEX. They are using weighted average measures to calculate Hang Seng Index from from these 33 stocks price. These are the Python scripts. And let's do the exercise together. We copy the command to Jupyter Notebook. And we can quickly compare their long run and short run differences. First, let's compare. Okay, this is very long run, right? We can compare the long run from 2010 to 2022 this year, July 20th means today. This is for SSE Composite Index, and this is for Hang Seng Index in Hong Kong. Now let's compare their very long-term run. In the meantime, we also try to compare their short run. For example, 2022 starting from June to today. And the Python tells us it has successfully retrieved 2,632 records for Hang Seng Index. Now it's working, I believe, on retrieving the SSE Composite Index. It's pretty slow because we use a very long term here. Very long term. Okay. Now we captured much more records for SSE Composite Index. We have a couple of reasons. Probably from the data source here, we don't have so much records for Hang Seng Index. So we can look at the starting date from the figure later. We can shorten, or we can even change our data source in order to get more records for Hang Seng Index. Now, I believe the command is drawing pictures. Let's wait for another few seconds. Okay, eventually we have the curve. It takes longer time because we are using a very long period of time. It's about 12 years, right? It's about 12 years. Now, this is the differences between SSE Composite Index and Hang Seng Index from long run. Okay. First, we find that yes, we do have a problem in retrieving enough data records for Hang Seng Index, the solid blue lines. Later we can change our data source and try again. Yeah, very different from each other. We can easily find out their differences. However, in terms of changing trend, there are also many similarities between these two stock indexes. For example, we can find out something here, right? Yeah. Although it looks very different, but if you look at every turning points, you can find out they do have similar changing trends with each other. That means there are more and more interaction between these two stock markets, or between Shanghai Stock Exchange and Hong Kong Stock Exchange. More and more interactions between these two markets. Okay. Now, let me try to change the data source and run this command again. Okay. Yeah. We insert a new blank cell in Jupyter Notebook. So we insert a new command here. Now let's run the command again. This time we want to find out more records for Hang Seng Index in this part. Okay. It seems I did not success. I did not succeed. Okay, anyway. I get the same number of records for Hang Seng Index. Its data source here is stock. This is a website in Poland. Previously, I expect to use a new data source from Yahoo Finance, but I did not succeed. Okay, never mind. It will take a minute. Let's back to our slides. Okay, we are doing the exercises together. Next, let's look at the bond market index in China. Usually, when people talk about market index, we usually refer to stock market index by default. However, we have market index for stock. We also have market index for bond. Do we have market index for other financial derivatives, such as futures, such as options? Yes, we have. We do have, but they are not that famous. Not that famous. The most famous one for market index is the stock market index. Even the bond market index is not famous at all. I believe most of you have never heard about bond market index. What is the bond market index? Because from TV financial news, they seldom report bond market index. They almost never report market index for futures and options. Okay. They only report market index for stock market index. So from CCTV news, we find that usually they report the market index of SSE Composite Index and SSE Component Index and CSI 300 Index and Hang Seng Index and also the Dow Jones and also the Standard & Poor's 500. Sometimes they also report the Nasdaq Index. That's all. That's all. Well, when we talk about Europe, sometimes they also report the FTSE 100 Index in UK, as well as the DAX Index in Germany and the CAC Index in France. That's all. Okay, of course, we'll introduce those market indexes later to you, but in a brief way. So let's go back to see, okay, now we have the results. There's no difference here, right? No difference here. Okay, this is from long-run comparison between the market index of SSE Composite Index as well as Hang Seng Index. Now let's compare this from short-term run, and let's look into more details about the differences between these two indexes. Okay, let's wait for a while. This time, the number of records are close to each other. You may have the question why these two numbers are different. Because of the business days of these stock markets are different. For weekends, they are the same, but for public holidays, we have lots of differences. Okay, so this is from short run. This one is the Hang Seng Index. And this orange dot one is the SSE Composite Index. Yes, we can easily find out more differences between them. For example, for this period, it's pretty different. For Shanghai Composite Index is up and down and up and down. But for Hang Seng Index, it's relatively flat. It's relatively flat. And for the pictures here, we find that Shanghai Composite Index arrives a ceiling point first, then goes down, while Hang Seng Index arrives its ceiling points a little bit later, then goes down again. So from this, what can you find? Probably you can do arbitrage trading. You can have arbitrage trading strategy. Okay, it is very strange for my pen today. Okay. Arbitrage trading strategy. In this strategy, you trade stocks in Hong Kong, but you look at the changing trend of Shanghai. If there is a turning point in Shanghai, that means in Hong Kong market, there will be a turning point very soon, probably just after one day, or even within the same day. This is in the morning and this is in the afternoon. Well, in this picture, we draw the curve in daily frequency. So, for example, today we see a turning point in Shanghai, and tomorrow we may see a turning point in Hong Kong. Now, you have the idea on how to trade the stocks in Hong Kong, right? However, this is based on the assumption. That means turning points comes earlier in Shanghai than in Hong Kong. But this is not always true for every day, right? It's not always true. So let's check. Okay. Well, this is a small turning point, always same. Okay. Here, almost same day turning points. That means this is the floor points. This is the floor points. At floor points, what you should do, you should buy in, because after the floor points, the stock price will goes up again. However, these floor points in Shanghai and Shenzhen almost in the same day, right? It's July the 15th. So what about the others? These turning points, same in Shanghai and Hong Kong, right? And these are different situations. You may be misled. Misleading. Okay. What about these points? Okay. These points in Shanghai is later than that in Hong Kong. Well, these points is earlier. Well, it's complicated, right? So sometimes you may be misled. This is pretty interesting in short run for the differences between these two market differences in Shanghai and Shenzhen. Now let's look at the bond market indexes in China. This is the bond market indexes. Well, bond market index is not that famous as stock market index, but it do exist in market, and it also have indicating functions if you do bond business. Okay, this picture is pretty interesting. Wow, it's a very long run, starting from 2010 to this year. We have the SSE Treasury bond indexes. Okay, we know Treasury bonds. And the SSE Treasury bonds means the exchange bond market in Shanghai. The exchange bond market in Shanghai, in SSE. In Module 2, we have just learned the exchange bond market. So primarily, we have two big types of bond markets in China. One is called the interbank bond market. Another is called the exchange bond market. And for exchange bond markets, we have two, one in Shanghai, another in Shenzhen, right? And personally, I think the exchange bond market is growing very fast because it is in a more convenient way for investors. It is open to both institutional investors and individual investors, while the interbank bond market is open to only institutional investors, not to individual investors. This makes the exchange bond market much more active than the interbank bond markets. Okay, and this graph, we also use the two vertical axes. The left side is SSE Treasury bond index. Okay, Treasury bond index is used to describe the not the whole bond market, but the Treasury bond markets. Okay, and the right side is the SSE Composite Index. Now, the blue solid lines is for SSE Treasury Bond Index, and the orange dot lines is for SSE Composite Index. Of course, using the method I've just shown, we can move this legend to probably here, right? This is better. We'll do it later. So from this graph, what can you find out? What are the most significant features of this picture? We find that the bond markets fluctuate too much. It means the bond markets is too dangerous. It's too risky, right? Oh, sorry, stock market. Stock market is too risky because the price fluctuate too much. And after 12 years, let's look at the price level. It should be this way. It's still around 3,500 points, right? Nowadays, in 2022, it's around 3,500 points. However, 12 years ago, it's about at the same level. Well, this from another perspective, it proves that the stock market is too risky, although it may generate higher return, but it's really, really risky, right? However, if we look at the treasury bond markets, wow, this is a perfect, beautiful, uprise curve, right? It's a perfect curve, upward. So 12 years ago, it starts from here, for example, probably it's 222 points, and all the way up in the last 12 years. Now, it is about 185, from 122 to 185. It continuously upward. This is pretty important. Although bond market cannot generate a very high return, but it is less risky. And for stock market, it is much more riskier, right? It's much more riskier. So this is what we find from the comparison between stock market and treasury bond market. Treasury bond market. That's why whenever we have new treasury bond issuance, you can see a long queue. A long queue in each of the bank, because bank is the mainstream channel for the central government in China to sell treasury bond, right? A long queue. Even before the door of the bank is open in the morning, there will be already a long queue by senior people. Here, senior means aged people. A lot of 大爷 and 大妈 queue before the door of a bank branch and wait for the door to open. And usually treasury bonds in most of the bank branches will be sold within the first hour of the first day to issue a treasury bonds by central government. So it is warmly welcome in China for treasury bonds. It is because it is less risky compared to stock market. This picture tells us lots of important but basic information about stock market and treasury bond market, right? It is pretty interesting. However, in Shanghai bond markets, there are not only treasury bonds, but also other bonds. Actually, in Shanghai bond markets, we have primarily three types of bonds. One is treasury bonds, and in accordance, we have SSE Treasury Bond Index. And then these two are for commercial companies. sorry, not for commercial companies. This is for commercial companies. Commercial companies. And this is for SOE companies. You know, SOE, state-owned enterprise. In China, for company bonds, we have two types. One is SOE bonds, another is commercial company bonds. But in other countries, there is only one type. It's for corporate bonds. Okay, so next time when we talk about enterprise bond and corporate bonds, they are different in China, but in Hong Kong, they are the same. They are the same. In Japan, USA, European countries, they are the same. This is different in China. And you can compare treasury bonds with the enterprise bonds and compare with corporate bonds. In general, we can say that treasury bonds is less risky. It's less risky. While enterprise bonds, it's SOE bonds, so it is a little bit risky. And commercial bonds means corporate bonds in China, it might be riskier. But this is only in general. In short run, may not be the situation. Because as we have learned in Module 2, the most critical factors to determine bond pricing, we have coupon rate, right? And we have YTM. And YTM roughly equals to market interest rate. Also, another factor has a big influence on bond pricing as well, which is maturity or time to maturity for a bond. So these are the three critical factors to determine bond pricing. So in general, this is the order of risk, but for short run, if we compare two specific bonds, it may not be the cases because it also determined by these three factors of the bonds respectively. Okay, let's try to compare. And this one is the SSE Composite Index, and this is the SSE Treasury Bond Index. Okay. Let's do a quick exercise on this. Copy to Jupyter notebook here. This looks better. And okay, let's change the date to this year. We set the start date as January the 1st, 2022, but we know that January the 1st is not a business day. Usually we start from January the 3rd, but it does not matter. And the end date is at 2022, July 20th. It's the day, right? And let's look at the situation in this year. This time we use this command, compare security, to compare bonds as well. But this command cannot handle the bonds in interbank bond market in China. Now, this is another very interesting picture, right? Very interesting. Let's look at this picture. The blue solid lines represents for the SSE Treasury Bonds Index, and the orange dot lines represents for SSE Composite Index. Well, for SSE Composite Index, we can find this is a very critical turning point here. It's close to May this year, right? And before May this year, the stock market in Shanghai, in general, it is probably see. It is wow. Its trend is like this, and after May, its trend is like this, right? Okay, probably this is another turning point. I'm not very sure about that. Okay. However, for the treasury bond market, we have a different situation. Let me change to a different color. Okay. Now let's draw the trend for treasury bond markets. It's here. Well, I must say that this is a beautiful curve, a perfect curve for investors because it's all the way upward, right? It's all the way upward. It's beautiful. So what do you think about the difference between treasury bonds and stock market? Let's summarize. Let's do a summary. First, in terms of return, strange. In terms of return, I must write very slowly. In terms of return, in stock market may generate higher return, but not sure. Sometimes it's higher loss. However, in terms of risk, stock market is riskier. Then let's see the treasury bond market. In terms of return, treasury bond market cannot generate very high return, but it can generate a sustainable return, right? And in terms of risk, treasury bond market has less risk or is less risky. So depends on investors. For example, basically we have three types of investors. The first kind of investors, we call them aggressive. I must write very slowly. Aggressive investors. And another end of investors is called conservative investors. Conservative. And then in the middle, so sometimes we call them kind of investors, robust investors, or blah, blah. So for conservative investors, I believe some of them will like treasury bond market, right? And for aggressive investors, some of them may like stock market. But in order to balance return and risk, even for aggressive investors, I also suggest you can make an investment portfolio by holding a specific percentage of bond in order to offset the risk in stock market. We will talk about investment portfolio in Module 5, which is we need more complicated knowledge. Okay, let's have a break. We will have a 10 minutes break.